Good evening to all. We are delighted to welcome you in the virtual CP meeting on Management Accounting Insights, Art and Science of Decision Making, Top Management Perspective. Being organized by Committee of Management Accounting CMA of ICAI and hosted by Amritsar branch of NIRC of ICAI. The ICAI has been providing continued inputs to its members through seminars, lectures, workshops, technical literature, e-learning, web-based trainings, etc. Here, going in this direction, we heartily welcome you all in this VCM. Before going ahead, I would like to invite CA Jatinder Vansalji, Chairman Amritsar branch of NIRC of ICAI, for his welcome address. Over to you, sir.
Thank you, Vidiji. Am I audible?
Very much. Please go ahead, Chairman Sahab.
Yeah. Thank you, Nandaji. Our guest speaker of the day, CA Dr. Sangeeta Panditji. Moderator of the day, Mr. CA Vidit Vikund Vansalji. Vice Chairman of the Amritsar branch, CA Shashipalji. And my most dear, although I am bound to take his name at the first, but because I love him, he is my friend, CA Charanjot Singh Nandaji, Central Council members, my other professional friends, colleagues, ladies and gentlemen, a very good evening to all. I truly feel honored having your presence on today, that is Friday evening. I extend a very warm welcome to all of you on today's virtual CP meeting on Management Accounting Insights, Art and Science of Decision Making, Top Management from the Top Management Perspective. The Amritsar branch of the NIRC of the ICAI has hosted this virtual meeting, which is organized by the Committee on Management Accounting. Members, I again congratulate to all the Central Council member and Regional Council members who have just been in this election, which was held on the 3rd and 4th December for the next 3 years. And special thanks to our Central Council member, CA Charanjot Singh Nandaji, who is with us. And I am also thankful to him because he was always helpful for organizing such type of seminars and webinars from time to time. Members, we all know that decision making at the top level is important for the organization. Top management is bound to take into consideration the impact of decision making in short run, medium and long run for the growth and stability of the organization. Any decision of the top management definitely have an impact for its policies for the growth of the organization in the short run and in the long run. Members, you are already aware regarding the activities of the Amritsar branch, and in the last month, branch has organized series of activities for the members and students, which were highly appreciated by the members and students. This month, the elections were also held on the 4th of December in the Amritsar, and I am glad to announce you that, not announce, but it is tell to you that the polling was more than that 62%, which was highest in the north after that Ludhiana. There was 67%, I think, but in the Amritsar it was 62%. And it was highly appreciated by the members because there was very cordial relations at that time and it was smoothly held. The branch is also planning, members, the branch is also planning to visit Kartarpur Sahib in the month of January, and I request you all, if you are interested for them, you can send your message in either to the branch committee or to anyone who to the Anisha ma'am, which is our coordinator in the branch. I will not take much of your time and hand over the proceedings to our moderator, CA Vidit Vikund Vansalji. Thank you.
Thank you, sir. Thank you. Moving ahead, I would like to invite Charanjot Singh, sir, CCM member, for the keynote address. Over to you, sir.
A very good evening, ladies and gentlemen. I am truly honored to be here after a span of nearly 4 months. I remember the code was strictly enforced on 1st of September 2021 and it was lifted yesterday only. Madam Sangeeta Pandit, the very respected faculty of the day, my brother and chairman of Amritsar branch CA Jatinder Vansal, my very dear friend and vice chairman of Amritsar branch CA Shashipal, my son like the moderator CA Vidit Vansal, and all participants who have come here. I am very excited to address to you because over the close to 4 months I have not spoken. This is my first seminar where I am coming back to public, and that too with the holy branch of Amritsar. Amritsar is a very holy city, and I propose people who have not visited Amritsar to please go and visit Amritsar. A very beautiful city, holy city. You will feel the vibes and you will enjoy the hospitality of people of Amritsar. Today's webinar is very aptly planned. It speaks of management accounting insights, art and science of decision making. Now you need to understand one thing very clearly, that when you speak of management perspective, when you speak of the management initiative to create value and worth, when you speak about the board being empowered, the most important thing is the right decision making. So how do you arrive to such decisions? I have a small PPT which I will share. Give me a second's time. I'll just come back to you on that. 1 second only. Is my PPT visible? My PPT is visible, Vansalji?
No, sir, no.
Yes,
now
sir, now it's visible.
Great. So the first and foremost thing is that there has always been a thought process whether decision making is something that creates value, whether decision making is something that is born with you when you are born, or it is something that can be acquired. So the most important thing is to understand that it is a coveted skill, it is a leadership skill, and it is very important for a leader. The fictional idea of a strong leader is when you have the right idea of strong decision making. Strong decision makers make smart key decisions at the same instinct. They understand how they have to work and move ahead. Let me tell you, they are passionate. The great leaders are driven by their intuition. But the most important thing is that they understand that the process of choosing the best part is both an art and science. I am a student of accounting. We always discuss whether accounting is an art or science. There are two different perspectives. Art gives you the art of presentation. Art gives you the rare instinct to perform. And more importantly, the science gives you a correct idea of what will happen once you do what in the right esteem. So ladies and gentlemen, you need to first of all understand what is decision making, whether it is an art or science. The objective of this entire study is to ensure that more complicated components to decision making are totally discussed so that people at the top management level do not feel taken aback when they come to newer ideas. So going ahead on this, we need to combine data where both knowledge and your art meet, where both data and your style of proposition, your instinct, your passion meets. What do you get when you do this? How do you understand the outcome? So just like when you take a trip, you know where you need to end. So when you take a decision, you need to know where the decision will ultimately take you. As we contemplate a decision, it is easy to focus solely on the outcome, but the process of outcome is equally important. I want to tell you, I was today discussing something on management audit. Management audit, there's a big difference between management and compliance audit. Compliance audit ensures that all things are taken into account, but management audit ensures that whatever perspective felt a control to be there, that perspective was thoroughly and truly filled on. We have to understand how we can use the art of science of decision making to create value. Please, it also includes the art of questioning. inappropriate framing of questions. When you ask questions to yourself or others, if they are not appropriately framed, the outcome is always dubious. The thinking process has to be crystal clear. It has to be on the same page with the person with whom you are understanding. When you take decisions, particularly at tough times, you need to have the mustered courage and, more importantly, the initiative to perform and give the best. So you need to understand that art of decision making has a solid foundation. It has mixed feeling and reflections. It is a person to person perspective, but the outcome always has to be great, splendid, something which is really marvelous. Now, how do you go on the science? The science of decision making ensures that effective decision process is in place. We need a sound process to frame the decision, spec out the options, and weigh that they are on the right perspective. Balance is very important in life. So when you make a decision, your balance, the balance to perform, the balance to estimate the outcome, and the balance to ensure that the entire process goes on in a smooth manner is very important. The entire decision-making process includes a number of things. It includes understanding the need, engaging the key stakeholders, very important, ensuring effective communication, how things are put across, assessing alternatives. Yes, there has to be a damage control plan, developing consensus where all stakeholders come, plan, communicate, execute, and follow up on decision making, identify potential benefits, escalate them to the stakeholders, and ensure that the relative stakeholders have the maximum benefit of it. You have to understand both the art of intuition and the science of analytics. Both have to gel, both have to mix if you want to have a proper decision. It is both an art and a science. On the conclusion, I would like to tell you a few things. You need to understand that when you leverage your thought process on a particular point, you need to look at all the pros and cons. When you move ahead, at times detail analysis is not important. When you go into data analytics, you don't go into the quantum of data. You see exception reporting. When you speak of decision, the scenarios includes identification of task, understanding the task, what is expected, how to match the expectation gap. And let me tell you, decision making is art only until the person understands the science, because when both of them gel, a great model is unveiled. The model to success, the model to combination of both creative thinking and critical thinking, divergent and convergent thinking process, so that we are able to work in tandem to give the best. Ladies and gentlemen, we have Madam Sangeeta Pandit, who's a senior chartered accountant, and at the same time, she has got a great experience into the process, how to identify the process, how to determine the process of making effective decisions. So I leave with this up to Madam. Now she can take this forward. And I want to tell you that we at the Committee on Management Accounting are very passionate to give you the best. In case you want certain topics that can be taken, I'll be more than happy to discuss with them. So ladies and gentlemen, over to Mr. Vidit Venkut Vansal to introduce the star speaker of the day, Madam Sangeeta Pandit, who will take you through all the processes, how you can create an infrastructure, a mindset to deliver the best of the decisions at the right time. Thank you. Thank you so much. I'm really obliged that I could come and speak to you after the selection. It was a hectic period, but still there is a saying, all that ends well is well. So ladies and gentlemen, I'm before you in your court, passing your test and ensuring that we do our best for the Institute to ensure that our great noble profession reaches unprecedented heights. Thank you. Thank you all. Over to Mr. Vidit.
You are not audible. Yeah. Now you are
Audible
audible.
now?
Yeah.
Thank you, Charan sir.
Very much, Vidit. Please.
Yeah, thank you, Charan sir. Your idea of divergent and convergent thinking, of gelling up of both the things in thinking is very unique, sir. Now I would like to welcome CA Sangeeta Pandit ji, ma'am. Introduction of CA Dr. Sangeeta Pandit ji. Sangeeta Pandit ji was a partner in chartered accountancy firm of repute from 1984. She retired and diversified to the teaching and training. She is head of Department of Finance at Premier B School, Sidham Management Institute. She is also visiting faculty at many B schools of repute like Xavier's and JBIMS. She gives guest lectures at US universities. She was a part of startup team of Management Institute's United World School of Business and Programs of Bombay Stock Exchange. She is an accredited cancer patient counselor and obtained her PhD in issues relating to healthcare. She works closely with various bodies for financial inclusions. She is an independent director in listed companies. She has many publications to her credit in reputed academic journals, written chapters of books by international reputed publishers, and has presented papers in international and national management conferences. She is a popular corporate trainer in issues relating to finance and soft skills. Ma'am, welcome to you. It will be great hearing you. Over to you, ma'am.
Okay, thank you. I will share my PPT, but I think the Chairman Nanda sir, he has put such valid points and has raised the bar of the webinar. So I think I'll have to rethink and the way I present it now. And he does that always, even he had invited me at Faridabad, this council, and I had to make a presentation on capital structure. His introductory remarks only had so much of depth of thought that I was worried if I could deliver well. So I just hope that I will be able to meet your expectations. So I'll just share my PPT, please. What is happening? Can you see the PPT?
Oh, ma'am.
Okay.
Now, now.
Yeah.
Started.
So the topic
Yes, madam, it is available. You please make it full screen so that all people can.
Okay, I've made it slideshow. Okay, so I have made it slideshow. I don't know now what else I can do from it. Okay, so this topic is management accounting, or art and science of decision making at top management perspective. So quickly I'll go through what is management accounting, then decision making, and then top management perspective. And I would like it to be as interactive as possible. Also, everybody knows management accounting is accounting information, but for management. Unlike financial accounting, which is more for outsiders, management accounting information is more for management to do their functions. So management functions are basically planning, controlling, implementing, coordinating, and decision making, which is, I think, one of the most important functions of management. And management accounting gives that information, which is not on public domain, unlike the financial information. So one of the main ingredients of management accounting branch is costing. And most organizations adopt all the forms of costing in their MCS or in their control systems, whether it be Oracle or whether it be SAP or whatever. So we all know marginal costing is you differentiate between fixed and variable expenses, and that helps you for fixing prices, the mix of products. So if you have 4 or 5 products, which products to manufacture more, which to manufacture less. Suppose some product is giving losses. Do you stop it or continue with that? Do you outsource or you do in-house certain processes? Then there is standard costing, where you have developed standards and compare it with the actuals, and that gives management by exception, because you only focus where you're going wrong and you don't meddle with things which are going right, where the variances are favorable. Then you have activity-based costing, so you know whether your revenues are commensurate with the costs which you're incurring on that. Then you have target costing, where you estimate the selling price and then find out what should be the desired costs, knowing what profits you want, and try to see that your costs are within those limits. In process costing, when a products go through various 2 or 3 processes or more, there is always some normal loss due to evaporation or some other reason. So whether your loss is within that, and if there is an abnormal loss, you look into it. Contract costing is for infrastructure projects, which depends on the architect's completion certificate, and there are so many common costs and how to allocate them. Now, all these require management decision making also, but it may be at a mid-level, but it's guided by the top management. Then another aspect of management accounting is budgeting, where you have fixed and flexible budgets, where suppose your target is 10,000 units, then you compare the actuals with 10,000 units only, but if your actual manufacturing is 12,000 or 8,000, then you change the figures as per flexible budget. You also have zero-based budgeting, where you don't look at the past and then start afresh. In sales, you have the bottom-down approach, where you get the figures from the people on the field, the salesmen, the sales managers and all, or bottom-up, where the top management imposes figures on you. So sales budget is normally the budget you start with, and then you have the production, inventory, purchase, and all other budgets. And cash budget is very, very important, because cash is king in business. And ultimately, the projected income and balance sheet. So in all these aspects, also very important decisions have to be taken. Statistics also is a part of management accounting, because in management accounting, in financial accounting is more historical. What is the past we record? But in management accounting, we take the help of the accounting information and estimate the decisions to be taken, which is going to impact the future. So there's a lot of trend analysis, estimations, forecasting, planning, which goes in that. So you analyze, you have tools to analyze, and there is data, a lot of data, which is normally divided into primary data and secondary data. Primary data is the data you collect from the market. If you want to introduce a product, the consumer behavior, the demography of the consumers, their income, their preferences, so many things you collect. That is primary data, which others have not collected. Secondary data is the data you rely on. So in management accounting, for statistical purposes, you analyze data statistically, you rely both on primary and secondary data. So these are some examples which I picked up. These are companies which were doing very well. Global companies, Tyco, Global Crossing, WorldCom, Enron, but which failed basically because the decisions taken were wrong. And these companies, which were on the same footing as these companies, but today also they're standing tall and doing very well, Cisco Systems, Emerson Electrical, New York Times, Walmart and others, because the decisions they took were right. So that is the importance of decision making. Now coming to top management perspective, there was this CEO of IBM, Louis Gerstner. When he took over the company in 1993, the company was mainly a mainframe computer company. And if it had remained to be so, it would have bit the dust long time back. But it was this top management decision-making ability to see that we have to now change and enter more into e-business solutions and networking systems and all. And today IBM is still standing strong. Then you had Motorola company, Edward Zender, who took over in 2003. This company was very, very obsessed and proud of their technology strength. And they gave a lot of incentives and bonuses to people who performed, the divisions who performed well, the products which performed well. But firstly, his strategy was met with a lot of friction. But then it has stood the test of time, and the company did very well in 3-4 years, because he shifted the company from being technology focused to customer focused. And he stopped this looking at the organization in silos and started giving incentives and bonuses to people on the overall performance of the organization. It took time for people to accept his way of thinking, but then it increased the profits over a period by almost 42%, and then he was a very popular CEO. Similarly, the 3M company, in 2003, the new CEO, Mechanik, entered. And he focused then on fast-growing sectors. He identified them, and he started the differential R&D system, meaning that resources of R&D will be given to those units which give more revenues. He introduced Six Sigma and matrices, like new products will be introduced only if they satisfy certain parameters. considering the requirement of the markets. So why is decision making one of the toughest management functions? Like I said, management has many functions, but one of the toughest functions is decision making, because you take the decision today, but it is going to impact the organization in the future. Only this we understand whether the decision was apt. See, on paper, an M&A deal looks excellent, but whether the synergy will happen or not, we'll understand 6 months or sometimes 3 years down the line. So it is actually, looking into the future, and only when we go into the future, we know whether we are living in the future, we know whether the past decision was right or wrong. One of the tips of proper decision making is to bear in mind the concept of goal congruence. Like everybody, there are so many in the organization. You will have lower management, middle management, top management, you have managers, you have employees, you have people working in regions, in the head office, in different departments and all, and everybody has their own agenda. Like an employee may be concerned of better working conditions, transfer to the hometown, or somebody may be wanting a fancy designation, somebody may be wanting to travel to exotic destinations. So it has a different goal in mind. Everybody has their own personal goals, and you can't expect an employee's personal goal to be in congruence with the vision or the goal of the organization. But the strategy should be such, the decisions taken should be such that in pursuit of the personal goal of an employee, the ultimate goal of the organization is also met, and the organization's bottom line improves, and the fundamentals, the net worth of the organization also improves. Like, for example, I can give you, once when we were doing some consultancy with an organization, they were saying that the CEO drives the people too much. So, he is very dynamic, he's very aggressive, and people are grumbling that they don't have assistants, and one person is doing 3 persons' work, 24/7 they are working. And then we went deeper and saw that his bonus was linked to the bottom line. So we said, just link his bonus to the attrition rate of the organization. Then he started being having policies, like in a week, half day would be spent in fun times, meetings, talking, then free movie tickets for family and all that. He just wanted to keep the employees happy. He didn't want anybody to leave. And automatically employees are happy, their productivity increased, and the goal of the organization was met, and the CEO's goal also was met. So this goal congruence has to happen, because people's goals and organizations' goals are different. So how do managers have strategies or take decisions so that in coordinates goals are also met? So how do top management take decisions that in pursuit of their goal, the organization's goal is also met? Another instance was there where there was a white goods company which was distributing goods, and they realized that they were getting a lot of complaints from the customers. And then when they did a little research and had asked us to look into the matter, we realized that the commission of the salesman was linked to the sales. And that's why the salesmen were very aggressive in selling. They were not bothered about explaining the features of the products. In fact, they were bluffing a bit. Then when we said give very little commission to the first sale and keep increasing to repeated sales in the same locality or the same area, whatever. So then they realized that word of mouth is important, and then they were very careful in selling their products and giving after sales service. So the salesman's goal also of getting commission was met, and also of the organization or branding was met. So this goal congruence is something which I have learned over a period is very important in taking decisions. Now, whether it's in art, science, and all, it is you have today. We have all learned tools in decision making, like the point of incidence, the point till which it makes no difference whether you take debt or equity. So then, why do you take debt and increase the risk profile of the organization? We all know how financial leverage can increase the earnings per share. But then, of course, there is always the risk that we will not have the liquidity to pay interest. So we need to look into the interest coverage ratio and debt service coverage ratio. When we go do CapEx, we have the calculations of NPV and IRR, that if it is IRR is what we desire and NPV is positive, only then we go for CapEx decisions. We have mathematical models, the EOQ model, the Miller-Orr model for cash. When you try to keep your surplus cash in liquid instruments and all. Today you have a lot of software, some are even free. You have the Tableau, we use extensively the Excel tools, Microsoft tools. If you see Cognizant, Accenture and all these companies will give customized software. They are basically based on Microsoft tools, which then they are worked upon to give you a proper solution. You have a lot of entrepreneurs too, who develop a lot of software for your particular solutions. You have CI tools today also. They are called conversational intelligence tools, which help you to gauge customer mindset, customer satisfaction index and all. You do have programmed machines. If you Google, you will see that there are a lot of robotic portfolio managers, especially in Bangalore, which manage your portfolio, which you give them your generic, you give them your age, your income, your spending habits, and they will try to analyze what is your personality, what is your risk-taking appetite, and have a generic portfolio for you also. And then machines have no bias, no conflict, and they will give you a true portfolio. Also, it doesn't matter to machines whether your portfolio is of 5,000 or of 5 crores or whatever, like wealth managers do, portfolios which are of low amount. And of course, you have emerging in technologies like AI and machine learning. Like it all started with robotic performance automation, meaning repetitive tasks like accounting and all were given to robots because they just had to be programmed, and the repetitive tasks they could do. But slowly this repetitive tasks then started into analysis, data analysis. Then it became intelligent data analysis, that is AI. Then machines started learning and changing the algorithms and learning themselves. And then it was deep learning also. It ended in today. And now, of course, you have bots, which you have those virtual bots who answer your queries and all. So technology is now at a different league. And as chartered accountants, actually, we don't need to know the technology, but we need to know how to use the information generated by technology to make the proper decision. And all said and done, whatever is the information that is given to you by technology, the decision has to be taken, and the companies are driven by human beings, and the decision has to be taken by the company, the employees or the top management or whatever is the level of the decision. And then my research shows that all human beings live in dualism. That is a higher consciousness and a lower consciousness. In lower consciousness, or you can call it normal consciousness, is very, very normal. You tend to be flattered if somebody appreciates you. You tend to be angry if somebody criticizes you. It is very normal to want praise. It is very normal to get hurt. Sometimes your ego is hurt. It is very normal to succumb to greed, like somebody is offering you a deal which is it may be a little against ethics, but it's going to be very good for the organization. So all this is very normal, but higher consciousness is not succumbing to anger or not getting upset if nobody praises you, is to be very aloof, to be very balanced. So at least when you are taking important decisions, you have to try to be in the higher consciousness. And it is tough, but it is people do practice. In fact, today the trend is for CEOs and CFOs to send them on holidays, to make them play golf, to give them time to learn yoga and meditation and all that. So because they know that top management should be in a higher consciousness, should be very aloof, balanced, I think even Nanda sir used the word balanced, which is very important before taking any important decision. We all know that organizations have two types of risks: systematic risk, which we cannot really do much with. It is a risk which everybody is facing like this COVID-19 pandemic situation, or if there is a tsunami, or if there is some change in monetary policy, it is not in the organization's hand. It is the unsystematic risk, the risk of some technology failure, the risk of some fraud, the risk of some cash flow problem, risk of some substitution entering, which one has to handle. And handling the risk, of course, is a risk management, is a science by itself. It's a deep science. But again, also in risk management, whether to go in for the derivatives, whether to go for forwards, futures, options, swaps, which technology to have, whether to have a cyber audit or not. All these decisions ultimately has to be taken by the top management, and it is seen that the decisions are prudent only when they are in a spiritual state of mind, or I wouldn't say spiritualism is like religion or anything. It is in a calm state of mind. Like I can give an example. We were interacting with a chemical company which was producing some, along with their main product or byproduct, which was hazardous. And they asked a company to pick up that hazardous material for them. But we warned them that please ensure that that company does not dispose it off in any other way. So they said, no, our liability is done when it is out of our premises. But then it came back to haunt them, because that very poisonous thing was entering their groundwater too, because he was disposing it off in the wrong way. Then there was an FMCG company where there were some complaints because there was something wrong with their product. They should have withdrawn the product and accepted the error. But what they did is they just picked up that product from that area and dumped it in another unsuspecting area. So as to not make losses or to cut down their losses. So, but then it came back to haunt them, because somebody in that area also complained, and they realized that the company knew and had done it. Another where we were working, there were assembly line workers who were wanting some gear to protect themselves. But the foreman and also agreed with the top management, saying that by law they don't need that. But then somebody was injured in a bad way, and then they faced greater costs and reputation loss and all. So sometimes top management does take decisions which is short term, but they have to think long term. They have to have a broader perspective, because they have to think that if the decision is just to cut losses and increase their bottom line, it is a very temporary thing. They have to take a larger look and not look only from compliance viewpoint, but also whether it is ethical too, and from the workers' viewpoint also. Another example I had come across was a printing company which treated their workers extremely well. And of course, the printing business was going down. I mean, people are going more and digital. Who wants calendars and diaries and, cards and all? They were not doing well. They had few employees, but they treated them very well. And though they were not doing good, they tried to not decrease the salaries. They always looked after the employees in their times of needs and all, and did small things for their employees. And the employees had tremendous loyalty towards them. One fine day, when the owner called all of them and said, "I'm sorry, I just can't go along. I may have to sell the machines as scrap." All of the employees said, "No, we will continue." And they all put their head together and diversified, and that company is doing extremely well. So this is like inclusive management, you can say, where it's called management by objectives. When you take your people along with you, when the decision making is not very centralized. I know of another company, a pharmaceutical company, which employs people from 3-tier towns, from not Ivy League colleges, scientists and all. And what happens then? They train those people extremely well, and then these people are loyal to them for their full life, because when they look at their peers, their colleagues, they know that they are way ahead. So these are some decisions which top management takes, which in the long run can be very useful to the organization. So business decisions can be in business decisions like, go green, or try to use minimal paper. The raw material, the inputs should be eco-friendly. The packaging material you use can be eco-friendly. Or it can be part of your CSR, like plant trees or purify the water or spend on education, health. And it could be a combination of both also. The chairman sir also referred to diversity. That research has shown it really works, that people of the same type look at the problem in the same way. But if you have people from different cultures, different age groups, different areas, they look at the same problem in different ways, and then you have fresh perspectives, and you have better decision making. And of course, always buy local so that you get that area's loyalty towards you. And I think Nanda sir also referred to this, that value chain. You have to share your profits in the entire value chain. In the long run, it makes business sense that you are fair to your suppliers, you are fair to your employees, you are fair to your customers, and in the long run, it makes sense to pay your taxes also well, and also that you take care of the ecology, and you are giving employment to a community. But you also have to say you don't pollute the atmosphere and the waters of that area. And most important thing in decision making is you can never be reactive. Like some of our laws, if you see, are reactive. After something happens, the law is passed to plug that loophole. But in business, you cannot be reactive. Something happens, you cannot be angry, you cannot be upset and then take a decision. That you always have to be responsive. You always have to be in a cool, calm state of mind, and whatever works for you. Before taking important decisions, some CEOs, CFOs, they pray, some chant, some do meditation, some play music, some sing, some play music, some whatever works for you to be in a calm state of mind. Only then that is being responsive. And documentation is also important, like when things are in writing, like suppose somebody forces you, you are in a bank and you are forced to give a loan, which is, and that person is not worthy to give a loan. Take it in writing from your senior that this loan is to be given. So documentation does help. And then when people are forcing you to take the wrong decision and you want it documented, then they normally say, okay, and they go ahead with it. And these are generic 7 C's, which are useful not only in decision making, but in actually in any sector or any field, whatever you're doing. There has to be clarity. Before you take a decision, there should be clarity of the issue on hand. Very often that we are in such a hurry to take a decision that we are not clear about what is the issue on hand. If you need to spend time, effort and all, but get the issue, complete clarity on the issue. And also the decision should be based on complete data. You cannot take decisions on half-baked information. You have to be proactive and try and get information, because very often all information is not given to you. And it has to be correct. The decision, the information that is given to you, you should be able to vet that information is correct. And it should be concise. Like, for example, I was on the interviewing board and we had to interview 18 people. From 18, we had to choose 2. So how do you remember after interviewing 18 people? So I had prepared an Excel sheet, and in the concise form, I had put all the characteristics of the 18 people. So, and given weights to that. And so there should be some way where the data which should be complete and correct, but it should be concise to help you to take your decision. And it should be concrete. I mean, there should be some impact of the decision. You don't take decisions just because you need to show that you're working. There could be days when you do nothing also. That is sometimes better than taking a wrong decision. So like, for example, they say in your portfolio, the weight should be adequate for it to have some impact, and the security value goes up. Similarly, decisions in an organization must have an impact. You don't take decisions just for decision making. And then that competency should be there. If you are taking the decision, you should be competent to take the decision, or not to take it, give it to somebody who is competent. And due to the decision, if you're implementing the work to somebody, the person you implement that work based on the decision should be competent to take that work forward. Otherwise, it is not fair to tell somebody to do something where the competency is not there. And the underlying of everything is courtesy. Whenever you take the decision, you have to communicate it, which is very, very important, in a very, very courteous way. Whatever may be your position, the communication has to be very courteous. It has to be in your DNA, a second language to you. you have to be solution driven in an organization, because you'll never find utopia in any organization. There will always be constraints. Sometimes some culture is very, psychophant type, and only people who butter up the bosses are given preferences. There is sometimes more than merit. The meritocracy is not there. Nepotism is there. Relatives and all are given promotions faster. Then the infrastructure may not be good, the approach to the office may not be good, the ACs are not working, stationery is of not good quality. So there can be so many constraints, so many issues, so many obstacles, but one has to be solution driven in an organization and take the right decisions. One cannot be a whiner, because perfect situation is never there, and top management should always, at least while taking the decisions, must be in a higher conscious state of mind. And the culture of the organization should be such that it should be, culture is something very, very difficult to define, and it is created over the years, but definitely it is a top management function. It automatically, how top management works, it gets percolates down. I remember long time back when we didn't have smartphones, we had these landlines and the EBEX and all those phone boards. You had those things where people put on for your intercom connection and all. So in one CA office, the lady was so rude always, the telephone operator. And then and another office has to call up. The lady was so courteous, very sweet, that she really put you in a good mood. And then I realized the bosses were also that way. One was very rude and the other was very courteous. So the culture percolates from the top, you have to remember. And always the vision should be long term. And before taking a decision, always there should be dialogue, because you never know who will give you a fresh perspective, a different perspective. And today what is happening in the world is that there is no asymmetry of information. Everybody is good. Whatever is your qualification, you at the tip of the finger, you have all the information available to you. So anybody with decent intelligence can use that information for the transaction which is on hand. Google can give you information right from planting a tree to filing a return to assembling a machine or building a rocket, or whatever you want is available to you. So information is available free of charge to anybody and everybody. That has removed the this disparity between rural, urban, between highly educated and not so highly qualified people. So everybody has the information. So what separates one from the other is right decisioning, if ability is there. And one of the ways also is right ability is to have dialogues with people. And another is to be very research oriented, have short pilot studies to see whether the decision of yours, if implemented, is right or wrong. So I had written a paper, Prudence in Business Decision Making, where of course I use secondary data a lot. Secondary data meaning the data is already available, where people have already done research on the prudence in business decision making. And there I was really surprised that the amount people lay stress on spiritualism, on higher consciousness, on balanced state of mind and all. And then primary data is I took interviews of head honchos, of CEOs, CFOs, and some of the middle management also who take important decisions. So this is some of the secondary data which I've just put here. And I took interviews of 50 employees and 25 people from the top management, and asked them questions relating to organization culture, the type of leadership, quality of the decisions, sensitivity to needs of stakeholders, mindfulness of ecology, preservation, and encourage them to tell their stories of conflict, motivation and all. And one interesting story I heard from one CEO was that they were an infrastructure company, and they got an offer to build something huge, and there was a deadline for that. So then they had a meeting, and then they said that, okay, let's, even it's not possible to meet the deadline, but we'll accept it. And when it's nearing the deadline, we will give these explanations that, okay, because of this factor, it will not be ready on time. It will take another 6 months or 3 months or whatever. So one team member objected to that, saying it is not right. When we know we cannot meet the deadline and they want it on deadline, let us be open and transparent about it. So they agreed to that. And then they said so. They lost the contract. It went to somebody else. Then these people came back to them and said, see, you told us the truth. Even the organization which took the contract and said they will meet the deadline, they could not meet the deadline and our costs have escalated so much. From next time we will give you the contract, and now all the contracts are going to them and their business has boomed just because of one decision. Then there was another story was told to me that a consultant is with a promoter and they have a big plan, a lot of planning doing, subsidiary companies and everything. And the promoter asked him, I will not fall into any issues with all this planning of yours. So the consultant replied, yes, it is all within the four corners of the law. The promoter said, no, I want it between the four corners of the intent of the law. And that is the vision the management has. Then the decisions are long term and generally such companies are doing well. So my findings were that ends can never justify the mean. It comes back to haunt. Like one person was telling me that money was coming into the organization and it was coming from abroad. So then somebody questioned the source of that money. Said, why are we bothered of the source of the money? The country should be happy that it is coming into the country. We don't have to question that. And then people stopped at that. They didn't probe deeper, but then it came back to haunt them because it was not, it was dirty money. Then even for when you want loans, you try to hide some things and all just to get the loan. It doesn't work out because then when you don't follow the norms, it means that you don't have the liquidity to pay the loan and the interest, and then you may go on the NCLT hammer. So, or capex decisions. Sometimes you take the decision just because you can, you feel that yes, it is the cost of the machine is much lower from the gains that you're going to get from that in future. But then you also have to see other aspects, like are the workers skilled to use that machine? Or if they are not, are you going to employ those new workers? And those new workers, will they be able to do the old workers' work? Does that mean you're going to lay off the old workers? So there are, and that is going to cause negativity in the organization. So in spite of buying a new machine, having skilled people to work that machine, you may not make profits because the environment in the organization is demotivated. Working capital, somehow, I've seen when I do my consultancy that working capital management people are not paid very well. But that is one of the most important functions in an organization. If the working capital management is not done well, there are so many important decisions to be taken, the level of cash, the level of inventory, your debt, the credit period to give to your customers and everything. And however much you plan your sales, you reduce your costs, ultimately it is the people of the organization which matter. And when you take decisions which is going to impact whether it's your capital structure, whether it's your capex, whether it's your working capital, your sales or costs, remember what would be the impact on the people, because it is the people which is forming the base of your organization. And why do some organizations do better than the other organizations is just because the people in that organization are happy. So my conclusion was that prudence is a word which all accountants know about, and it's easier said than done to be prudent. What the chairman sir spoke of balance, that is very, very important, because always decisions will be pulling. If something good is there, there is something bad also. And it's sometimes binomial also, that if you take this decision, you're not going to take the other decision. So how do you balance all these factors? How do you make it optimum? So that is a challenge. And of course, you can use your models, you can use tools, you can use software, all this, you can use big data analysis. All that is very, very useful. You need to do that. But ultimately, you have to take the decision in a balanced state of mind. You have to be aloof. third party view you have to take when you're taking decision. There should be absolutely zero bias in you. There should not be preconditioning. Most of us are preconditioned. We preconditioned our mind about something. And that is the beauty of research. When you do research before taking a decision, you realize that you start with something in your mind, that this is the circumstances and this is what is prevailing. And then when you do your data analysis, realize that what was in your mind was actually a fallacy. And then always have a long run perspective. Never have a short run perspective, because that normally short run decisions which are good only for the short run and not for the long run do not work out well for the organization. And you cannot take any decision unless you have clarity about the concept. If you do not have clarity, there is no harm in taking help from people who are experts in their field. And ultimately, you must have a very high emotional quotient, high EQ, which is easier said than done. It is very difficult not to get biased, not to feel more comfortable with friends in the organization, and not to want to deal with people you are not very friendly with, who are not from your background or whatever, with whom you don't have a chemistry or rapport. But one has to see the good of the organization. It is very easy to deal with vendors who speak sweetly to you, and avoid vendors who don't have time to speak and are very brusque with you and all. But you have to not be caught in this thing of feelings. You have to go beyond that and see what is good for the organization. So when people speak to you, you have to filter the toxicity for the good of the business. Remove all the negativity from that and go to the core part, and then only take your decision. Okay, so that is my end of the PPT. If you want, I can share my paper, which I had written, Prudence in Business Decision.
Thank you, ma'am, for a wonderful presentation. I'll just check if there are questions, any. Just a minute. Just a minute, ma'am. I am opening the web panel. Yes, ma'am. The people have been asking that to share your presentation. You can just send it across to the management, and they'll just circulate it.
Sure.
And someone has just asked that please summarize in a short form for today's topic. A little bit of summary insight on the today's topic. Someone has just asked.
Okay, I'll just show the summary. I'll try and show the summary. Just a second. Okay. So this is a model that I created after writing the paper. How do you mitigate risk of business failure? By taking prudent decisions. You have to reduce the risk of wrong decisions, because the decision you take today is going to impact in the future. And how do you reduce the risk of wrong decisions? It is the top management's responsibility to see that there is ethics, corporate governance, and ESG compliance. Now, this is not easy. And the professionals in the organization when an organization is professionally managed, it is very tough of them to deal with promoters. So they need, and they cannot, argue too much with the promoters also. So they need extremely good communication skills and negotiating skills to put forward their points, so that decisions are not taken decisions are not imposed on them to be taken, which are against ethics, which are against corporate governance guidelines, and which are not following the ESG parameters. And if you focus on goal congruence, like if you see that the decisions you take is in such a way that the goals of all stakeholders are met to some extent or the other. And by here I mean more of the employees and the well-being of the employees is met, then definitely the decision will be a useful organization. And when you take important decisions, actually, well, it's generic, even in personal life, if you take, or in business, when you take, you have to be in a proper frame of mind. And when I spoke to people, for different things work. Some do yoga, some do meditation, some do chanting, some do some relaxation exercises. Anything that calms and makes one balanced, pragmatic, only then you take important decisions. Now, information is a lot available to you, but that information has to be used by you to take the right decision. And you also have a lot of tools. You can Google about decision-making tools. There are a lot available on the internet. But the information, you should be able to use it and use it in such a way that you follow the rules of goal congruence and all. So this is a construct which I had done, that one needs to be ethical for long-run sustainability of an organization. And that is the leadership of the top management to convince the promoters that their goals should be such, which should be long-term, and you don't take shortcuts. And the framework in decision making, there should be flexibility in that framework because times change. The external environment keeps changing. But there should be a framework where decisions, where it is auto-run, your organization. So there is the human intervention is minimal, and human intervention is necessary in times which are different. And the information is very, very important. Unless you have data, you cannot take the information. So there must be huge amount of data, and the data should also be available on timely basis, and it should be correct. And one has also to be careful of agency costs, meaning that whatever decisions you take should be for the good of all the stakeholders and not only for the promoters. And of course, this is the buzzword today, ESG. You can see you have the ESG index also in BSc, NSC. You have 21 balance sheets of 2021 of Infosys, HUL, ICICI Bank, which have the ESG matrix also. So that is very important. So this, I would say, is my way of summarizing.
Yes, ma'am. So, and there's someone, Hitenj Shah, asking that the papers you were talking about, can we discuss them right now? Like, we have time, so if we can have a discussion on that paper as well, you can just elaborate a certain so that they can, read it easily once it's circulated.
You want me to circulate the paper now?
No, they just, so they have asked that if you can discuss on the paper a brief, sharing it over the screen and briefing it out so that when they read it, they have a starting insight for it.
Okay, can you see the paper?
It's loading, ma'am. Just a minute. Yes, ma'am. It's visible now.
Okay. Also, if you go on the internet, there are tests which you can do. How good a decision maker you are, and they give you scores also, good, excellent, average. So that just gives you a kind of idea. whether it's possible for you to take decisions on your feet, or are you the someone by nature which would tries to dilly-dally or something. Because it's decision making is very, very important. So this was role of prudent decisions on corporate success. See, quantitatively, they said that corporate success could be high profits, good growth rate, and substantial market share. But qualitatively, what it is, happy employees, happy customers, investors. And if for the long run sustainability and success of an organization, both qualitative and quantitative is very important. And you have sophisticated aids in decision making, but ultimately the decision has to be taken by people. And you have today, of course, AI, IoT, and they have radically changed the complexion of the business. And COVID-19 pandemic has highlighted the need to be agile and be prepared for all kinds of disruptions. So management includes decision making, coordination, control, and many functions. But decision making is the most important functions, and that whether the decisions were right or wrong decides the success or failure of an organization. Now, the objective of this research was to help to see what helps companies to take apt decisions, what helps top management to take the right decisions, and results in actions conducive to the company's growth. So this is the methodology which I followed. I studied articles, books, and published papers. That is their secondary data, and our primary data, I obtained answers, responses through questionnaires and interviews. And the finding was that management takes plethora of decisions, but it is necessary to be in a proper frame of mind while taking the decisions. From the secondary data, various variables were identified, they were analyzed, and the table of variables was created, and based on that, interview questions were designed, and the responses were analyzed using Excel tools, and the findings were arrived at. So this is this was my secondary data, where I divided between promoter-held companies, that 70% family-owned enterprises, 70% in US and 90% in India are promoter-owned companies. They are family-owned companies. So, how important it is for the professional management to be who is employed in the company to know what are the issues with the owners. There is ambiguity leading to conflict and eventuality failure when the boundaries are not laid down, because the professional management has to have clarity and the leadership to explain to the promoters how they want to carry the company forward. Then this was an article on functions of management, where again they said how important you have machines, money, materials in an organization, but also the fourth M, where management is an important resource, and in management the function of decision making. And this was the article, it's actually a book on the process of decision making. And then we don't realize that subconsciously we are under influence when we take decisions. An influence of somebody has said something, or some group is pressurizing us, or some preconditioned notions. How we have to be unbiased and have clarity of thought while taking decisions. This article showed that how on the basis of inadequate information we can take decisions, and also they have relied a bit on neuroscience, like how very often we take decisions based on some bad experiences which may be having, but times have changed. Like then how in another article they have described how your systems, your management control systems, which are governed by the management information systems in your organization, how they should be built on the concepts of fairness, justice. So when you adopt any system in your organization, your ERP system, you have to see that that system itself has inbuilt all these qualities, characteristics in it. Agency issue, if you see, there's a lot of discussion on that, because management has a different goal. while the people who have invested money, the minority shareholders, may be wanting something else. They want capital appreciation or good dividends and all. So how do you, and that difference is the agency cost. So how do you mitigate that cost and maximize your market value of shares? So this agency problem is discussed a lot in various articles. Then you have work environment, there's one article about work environment in the banks and how in one bank, when the management intervened to give them a better work-life balance, how the NIM of the bank increased. Then another interesting article was on performance, how sometimes the management feels that a person is not performing well, but the reason is not the person's competency. The reason is the processes, the systems in the organization are not right. So how one needs to have the maturity to go deeper into a bad performance issue. And of course, environmental, social and governance parameters is now the buzzword. It's become a global phenomenon now, and people, I believe the Australian pension funds, the Canadian pension funds are investing a lot of FPI is coming into India because into companies which they feel are ESG compliant. And then you have a lot of literature on state of mind and decision making, how they have tried to have spiritual leadership models in the organization, how a lot of stress is done on motivation, leadership, team spirit and all. So then I made a table of all the literature review, and then I discussed what were the variables which came from the literature. Was that how do you manage promoter managed companies whose vision, whose outlook to business may be different from professionally managed people? Then how in the functions of management decision making is so important, and then how companies don't spend the required time, money and expertise on this function. Like they may spend a lot of time on getting money from the sources of vendors, increasing the market share, how to improve customer satisfaction and all that. But putting resources to improve the function of decision making is not done. And how you can make a decision making very scientific by having a framework within and using tools and software, and how information data is so important, so vital. The data should not only be as voluminous, as humongous as possible, but also correct. And the system should be such that encourages good decision making, and it should be beneficial not only to shareholders, but to as many in the value chain. And ultimately, good corporate practices, good corporate governance is the key. Only then it is right. Then it is very wrong when sometimes employees are made scapegoat because the decision was taken which had an impact later on and somebody is made a scapegoat. It can never happen. You have to take a holistic view. And spiritual organization now today, whatever you call it, people are going back to various traditional practices to reduce their stress, and that really clears the mind of cobwebs and removes the bias from you, your preconditioned thoughts from you, and helps you to take good decisions. And system should be such, it should be responsive and not reactive. One has to introspect and then take a decision and not just react to a prevailing situation. Work-life balance is becoming more and more important, especially now in this pandemic time. It's 24/7 people are working. It is not going to office and coming back and leaving the baggage there because you are at home only doing your work. So this was what I had already discussed. And then I did the primary data. I took interviews and asked questions from top management people, about 25 CEOs and CFOs. Then the first question I asked was, how do you think a company can be committed to be ethical? And 19 of the 25 people say that they are coerced to follow promoters' goals. So corporate vision and thought process is actually undergoing a metamorphosis. Today, many promoters are understanding the importance of corporate governance. COVID-19 pandemic has also speeded the process because they've understood the importance of good employees. But it just highlights how important it is that professional management themselves have to be convinced of the benefits of good corporate practices, and they need, most importantly, the leadership to influence promoters, because 90% of the companies in India are promoter owned, and all over the world, if you see. Then adoption of digitization and to spend resources of money, people and time on that. 45 respondents said yes, expenditure was on technology approved, and most people today are sensitized to the needs of upgrading when it comes to technology. And data is, they feel, is very, very important in their organization. All of them feel that, and they see to it that data is saved, it is sorted, it is classified and used meaningfully, because there's no point in having data which every time you have to search the same data again and again. So you have to be very, very methodical and disciplined. Technology will help you to do the sorting of the data well. Then are there rules, manuals, standards or processes, standard operating processes which help you to take decisions? If yes, do you have the freedom to take a contrary view if needed? So all the 25 respondents discussed how the systems, policies, processes, checklists are there, and they are within the framework that one has to take. Some of the responses are that promoters are sensitive and focusing on short-term goals, and that is why these systems, policies and standard operating processes are in place. And this feudal system of boss and subordinate is slowly diminishing, and employees are empowered to take initiative. Like suppose a situation arises where you have to go against the SOPs, you can take initiative and convince the top management that you have to go against the SOP and take the decision. And leadership is slowly becoming more participative, and professional expertise is respected, and of course, creativity is encouraged, because, to reiterate, everybody today has the same tip of their fingers. You only need an internet connection, and the asymmetry of information has gone away. Everybody has information with them. So what distinguishes one from the other is being creative, being able to look at the same issue in a different way and be innovative. So do all decisions taken consider the requirement of being ESG compliant? The common thread was that promoters are aware of being ESG compliant or triple P concept or whatever you call them, but it is very painful for them to compromise on profits to follow the said concepts. And again, I come back to that professional management needs to be convinced of the merits, and they need to have the persuasive ability. I know that movie was there. I don't know if you have seen, a long time old movie, Ek Ruka Hua Faisla. I think Pankaj Kapoor was there in that. How he convinces about 8 to 9 people who are convinced that one person is a murderer, and how only with his persuasion he tries to convince them that it is not so. So that persuasive ability you need. Then what are the steps taken to improve the work environment? And many of the organizations now are becoming proactive to be employee-centric. Off-sites and in-office trainings are arranged. Soft skills, hard skills, and all are given importance. So along with hard skills, soft skills are also given a lot of importance. Then POS, whistleblower policies are improving. It was apparent that only 10% of the respondents actually genuinely cared for the employee. You have all this on your website, you spend money on your HR practices and all, but actually they are not that caring for employees. And contribution of employees to the bottom line and branding of the company took precedence over the well-being of the employees, which never works. In one of the interviews, one of the CEOs told me how at a crucial time, in spite of the bottom line being hit, a harsh decision was taken, which was for the well-being of the employees, but then in the long run, it paid. like I can tell you, my friend was working for an organization I don't want to disclose. When she had to go on maternity leave and they gave her 3 months leave, she came back after 3 months and said that I am leaving my job because I feel I'm still not ready. So they told her, take 3 more months, fully paid leave. And she was amazed. What do you mean? She said, yes, take it. After 6 months, again she comes back and says, I still feel I'm not yet ready. They said, again, take 3 more months. It was an MNC and they could afford it. They had deep pockets. But then she came back after 9 or 10 months and today she's still there, 33 years in that organization. So this is a long-term vision you have when you take a decision. Again, what is whether goal congruence, I explained to them, and are they following it? Then they said that it is they are trying through strategies to see that the employees' personal goals are also met in the process of meeting the organizing goals. But there is no specific framework in any organization to see that there is a goal congruence, and they definitely we will look into this. And do you think that you making ability, the significant is whenever we are in a relaxed state of, in hindsight, those decisions were prudent, and whenever we have been reactive, we has not been good. So I think that's it.
Thank you.
On the paper.
Thank you, ma'am, for such an amazing and nourishing deliberation on the topic. I believe that every participant here who has listened to your presentation must have learned something new, a new dimension to this topic. Now, I would like to welcome.
Sir, I just want to add one more thing. This is a great career opportunity for everybody because we focus on internal audit, we focus on statutory audit, but management audit is something which the business community needs. There are so many gaps where they take the wrong decisions, which has a long-term impact. So if the skill sets of management audit is built up, where our costing, budgeting, statistical tool skill sets become strong, it would be a great service which chartered accountants can give to the business community. Thank you, sir.
Right, ma'am. Thank you. Thanks a lot. Now I would like to welcome CA Sashipal ji, Vice Chairman of Amritsar branch of NIRC of ICI, to present vote of thanks. Shashi sir.
Thank you, Vidit ji, for giving this opportunity. First of all, I congratulate Committee of Management Accounting of ICI for organizing this virtual CP meeting on the topic of management accounting insights, art and science of decision making for top management perspectives. And also thankful to Committee on Management Accounting headed by Chairman Charanjot Singh Nanda sir, VCM, for making Amritsar branch host in this virtual meeting. As in today's session, CA Dr. Sangeeta Pandit, star speaker of the day, has deliberated on the management accounting insights, art and science decisions, and very smartly a technical and knowledgeable session. We are thankful to you, ma'am, for sparing your valuable time for us and enlightening us and giving us deep overview on the management accounting. Eminent speaker has shown a great command over the technical subject with excellent session. Ma'am, you have clarified each and every aspect in technical session and given us the deep thought about this subject regarding this subject, and also you created interest for the members in the topic, and I think everyone was affected with your wonderful and content-rich deliberations. I, on the behalf of Amritsar branch of NIRC and CP Committee of Management Accounting of ICI and members joined in this virtual CP meeting, propose vote of thanks to you, ma'am, for your wonderful deliberation and wonderful knowledgeable session. Thanks. Over to you, Vidiji.
Thanks a lot, ma'am. Thanks a lot, sir. Hope the session was.
Vidiji, you are not audible. Madam, it's really a wonderful presentation from your side, and I think members will have a lot of information from your presentation, and it will be very beneficial to all the members for the smooth running of their offices also, because sometimes it is very difficult to manage the staff and take the decisions on various aspects on the clients, and for the professional also it is very difficult. So I think members will enlighten with your presentation. Now Mr. Vidit there, kindly proceed, Vidit.
Thanks a lot, ma'am. I just got disconnected. I don't know, there's a network issue here. But indeed, at last you just told us about that. It's a very great career opportunity to, boost in other than the audits we do in our normal, routine work, that to consult the top management. And one more thing that you told us about the question answers, which we can Google it up and, take it to just analyze that how much skill set we have or possess to, take decision, or how much powerful is our decision making, which will not help us to, guide clients, but also to run our own offices.
Yeah, sorry to interrupt, but I'll give you the URL also of those tests, which are there freely available.
Right, ma'am, right. You can just share it with the management accounting team. They'll just circulate to us. Thanks a lot, ma'am. Thanks a lot for being with us and taking out time for giving us such a wonderful presentation. Thank you all. Thank you all for participating. It was indeed a very nice presentation. Thanks a lot. Good night.